Example, on May 1st, X1, borrower borrowed $10,000 from LenderCo for 12 months at 12% simple interest. All interest and the principal are to be paid on April 30th, X2. Per accrual accounting, record all required entries for Borrower Co. on May 1st, X1, December 31st, X1, and April 30th, X2. Per the matching principle, when should the interest expense be recognized? The loan was taken out on May 1st. And that money was effectively rented for 12 months to be repaid on April 30th of X2. The interest rate will result in a $1,200 interest charge against the borrower. If you take the principal of $10,000 multiplied by 12% per year, and we're just computing for a full 12-month period, it will be $1,200 for a full 12-month period. However, that 12-month period straddles two accounting periods, X1 and X2. So how much interest expense should be recorded in X1 and how much should be recorded in X2? If it's $1,200 per year for 12 months, that effectively means it's $100 per month. Therefore, since there are 8 months in X1, that would be $800. You could also compute that $800 by taking the full principal times 12% times 8/12ths of a year. In the following year, it's $400, which is 4/12ths of a year. In total, it winds up being $1,200 as expected, with $800 being recognized in X1 and $400 being recognized in X2. The journal entries need to reflect what we just learned. On May 1st, the loan was taken out. We debit cash, showing we have more cash, $10,000, and we credit note payable, $10,000, showing we owe more to the bank. Then at the end of the year, we have to look at this and say, wait, we've borrowed this money now for 8 months. We haven't recorded any interest expense yet. How much interest expense should we accrue into this accounting period to comply with the matching principle? And the answer is interest expense would be debited $800 to increase the expense. And since we haven't paid for it yet, we would credit a payable $800, showing we owe that money in the future. We post that credit to the interest payable account, $800, to show that at the end of 12/31/X1, we owe $800 of interest, which we know we'll have to pay off on April 30th of the next year. On April 30th of the next year, we have to accrue another $400 of interest expense for the 4 months that occurred in X2. We have to pay off the payable. Here we owed it as a credit, and now we're going to debit it to show that we paid it off. We're also going to eliminate the note payable of $10,000 by debiting that. In total, we must pay cash credit $11,200 to fully satisfy the lender. By posting the debit to interest payable, we'll wind up with no further interest payable at the end of X2. Stepping back to the big picture, we recorded interest expense of $800 in X1 and $400 of interest expense in X2. Do our recognized expenses comply with the matching principle? Based on what we saw in the prior slides, we showed $800 should have been in X1, $400 should have been in X2, for a total of $1,200 for the full year period. Yes, we did comply.